be happy to share a little bit. I think the interesting thing in this panel is that the purpose of this panel is really just to share with everyone of the landscape of CBDC discussion and also actions. And we started our work on CBDC in 2018, and we brought together a group we call the CBDC working group. And at that time, the main topic we covered was the risk and benefit framework of CBDC. And we completed a CBDC white paper and mainly discussing on the risk and benefit framework. And also, today that's when we were preparing for that report and we consulted with many central banks and also digital currency experts, and the consultation was really interesting, and the working group was very heavily involved in the discussion and drafting the white paper. And also, today is also, we want to use this forum to just convert our CBDC working group to the CBDC committee under the World Digital Economy Council. And so we'll continue to just engage different players in this space from the CBDC committee capacity. And Elaine, are you back? So if not, then let's just go quickly to the question. And so we have one question from Ruchi, and so Ruchi asked from an end user perspective, how would they know what's the better for them with so many digital currencies wallets in the market? CBDC is not completely new. It was launched several years ago in certain countries. So what difference now? And that's one question from Ruchi, and another question from me, and you can just choose whichever question you want to address. And that is my question is around the risk and the benefit framework, and see if you want to emphasize either the benefit or the risk. What is the one key risk or one key benefit from CBDC that the central bank need to address when they are designing or researching or implementing CBDC projects? And that's start from Chris.
To invite us in, maybe Elaine will be able to come back. He asked this question when the People's Bank of China went through how their experiment was going. How does the end user know? I mean, you might use WeChat, you might use Alipay, you might use any of the existing tools out there. We've all been using PayPal. When you look at Francisco's description at the beginning, where it's a currency that is backed by the central bank, and in that sense has the same authority that cash in your hand has, there is a difference between formal payment provided by commercial banks and payment providers and a CBDC. I don't really think you can say that this has existed time as those definitions that you saw can be described as a CBDC. But this is where it's to keep things as stable as possible. We want to keep the commercial banking system in place where you still have a commercial bank and you keep your digital cash, the relationship with your commercial bank. Then you don't really see a difference. So in China, what you see the option, you can either use Alipay or WeChat from your bank account, or you can use your ECNY to pay for the same thing. So it's simply a drop-down option. And the physical difference noticed by the end user is very minimal at that point. Then come when it's adopted more widely. So there is a difference, but if you choose the model where you have the most minimum disruption, the end user won't notice the difference at this point, but they will do so as it becomes more, particularly do so in the times of crisis when individuals might choose to put all digital currency rather than in a bank account or a payment system or payments card that they already have. And that's where the crucial difference lies. In terms of the biggest benefit and the biggest risk is certainly around transition. If transition goes wrong, whether we're mostly talking about retail CBDCs here, but if you're talking about wholesale or retail CBDCs, which has some sort of trust, central banks are going to be in real trouble. So the reputational that that Sonja spoke about is massive. The transition risk of things going wrong, market failure, system failure, technology is enormous, and that's the thing that keeps the central banks awake at night. Certainly, in terms of the biggest benefits for a small country that uses the dollar anyway, this is a good opportunity to reduce the barriers that using cash it entails for the population. So for smaller economies, island economies, right now, some of those would benefit more from having a digital currency than having cash. So that's where you would see the immediate first benefit and the fastest change when it comes to adoption of CBDC. If there's no correspondent bank that has to use the dollar, it's expensive to transfer, remittances are expensive. And you can use what Francisco described as the account-based method to do. We'll see some of that. So that's the biggest, quickest benefit right now. Financial inclusion for people for whom cash in those particular type of economies. Thank you.
Thank you. Yeah, and let's move to Francisco. And I know that you have to leave at 11:30. Thank you for staying on. And yeah, please just respond to the question if you have to leave, and we understand. Yeah.
Thank you, Xiaochen. Yeah, so I'll probably have to, but I think your questions are quite good. Also, question on Chris's elaboration of the different, making sure that the customer knows that there's a difference between bank versus any other commercial entity. Digital form is a big challenge, right? Because in the physical form, well, they're only banknotes issued by the central bank. There's no other type of issued by central banks. In the digital form, there will be a plethora of things. So this is one of the challenges that we're trying to start, and this is something that in our the value proposition and the design of it, you have to brand the means to hold that balance in a device or in an interface if it's online. So it's a big challenge out of that. And let me move on to risks and benefits. So I already mentioned the risk. So let me give you an idea of how we think about benefits. The way to think about benefits are in the following way. From a reactive point of view, central bank, meaning you would want to maintain the good things you have already in your system, meaning sovereignty of benefit when you're at risk, right? I mean, there are one sets of benefits. Other sets of benefits are the aspirational, is trying to do better than what you have currently in your system. For example, extending financial inclusion or creating a more complete system. So those are things that we, with physical cash, but it's an opportunity. The list is too long to go over that, but in these two terms. So what is, I want to maintain whatever things, and there might be things to improve on the margins, and that might be, for example, competition, protecting, leave it at that.
So thank you, Francisco. And now let's move to Sonja.
Yes, I agree that it will be important to involve the users sort of in deciding which currency to use for what purpose. But I do believe that it's good to have options. It's good to have choices, and the users should have those options. And depending on their use case and what they're trying to trade or buy or settle, like they might be using different means of payment, which is okay. We're doing that, right? We're using credit card, we're using Venmo, we're using most options, at least in the advanced economies, right? Important when thinking this question is to educate users enough to improve their level of financial and digital literacy, that they're aware of the options they're choosing and the impact that those options have for them. I think that's one area, particularly in emerging and low-income economies, that governments really have to invest a bit more time and effort, because ultimately, you know, the consumer needs to be protected. You know, malicious attacks. So it is important for the users to be fully informed of the choices that he or she is making when opting for one currency versus another. But again, it's good to have those options. In terms of the biggest benefit, I think with the COVID pandemic, it's increasingly becoming evident CBDC as a payment rail to distribute stimulus. Fiscal stimulus is a really powerful tool. And I think that the sand dollar, the behind dollar, is case in point of, like, in this case, it wasn't a public health emergency, but helping and supporting citizens in the aftermath of like hurricanes or inclement weather events is really important. It's critical to be able to react quickly and to reach the population in need, specifically for island nations such as the Bahamas that have like populations in remote areas, very hard to reach, where cash needs to be shipped on boats and may be intercepted and so on. So I think that is a very powerful benefit that a country can sort of weave into the overall strategy, like digitization strategy. And CBDC should be. I do think that cybersecurity will be the one risk for this point about programmability. And we spend a lot of time talking about the great advantages of DLT and smart contracting options, but really those are where this is where the vulnerabilities are being introduced into the product, right? And it's not just there. You know, you can have a robust product, but if any of your staff, operational staff, clicks on a phishing link for your product, will be vulnerable to that. Will be vulnerable. That introduces a cybersecurity risk by exposing their system to malicious attack, for example. So really thinking about cybersecurity is an important, critical point for central banks, because it is just so pervasive and it's so across multiple layers, like the software, the hardware layers, and the human. And this makes it extremely difficult to manage, especially when we come into a territory of like automating many of the processes that are happening manually.
Yeah, thank you, Sonja, and I think those are very solid points. So again, thank you very much for this panel, and I hope that you get an idea. For some central banks, they are just considering CBDC. Some already just said no, and then we are in the near or even midterm we are not considering it. Then there are other central banks who are doing research and research go to different directions, you know, from the risk benefit to the design principle and all that. Then there are also, you know, central banks who are, you know, at the pilot or just the post-pilot stage. And I think this is a really exciting space where that you are going to see a lot of actions will happen in the next few years. And we at the CBDC committee and will continue to engage with the central banks and also the digital currency experts to just bring this kind of learning opportunities to everyone, and also hopefully that we can facilitate this, you know, public-private dialogue, and then hopefully, you know, this can just help to just build the ecosystem together with other, you know, players in the space. And again, that's, you know, this is also our CBDC committee launch event, and you are here, and we really appreciate you staying with us. And now let's move to the third panel. And in this panel, that we are going to, you know, share a little bit about account-based CBDC, and also some of you know, the input from the private sector, especially link CBDC with the payment. And then we look at you know, Marshall Island sovereign coin after, you know, a few years, and the project has just make some progress, and see, you know, how some of the CBDC or digital currency projects which you know, are a little bit more advanced, and what experience and lessons that they have learned. With that, I would like to invite Francis, that you can just start your presentation.
Hi there, I hope you can hear me okay. I don't use slides, as people who've heard me talk before, I rarely use slides, and I'm not using them today, partly because I actually want to see what's been talked about in the previous panels, and then kind of sort of organise my remarks around what has been said before. Otherwise I end up repeating things, and it's very boring for everybody. So things that we haven't really talked about so far. All of our focus has been on retail CBDCs and not on wholesale, and I actually think that's quite important. And the thing is actually to do with fundamentally how money is created in our society, and this is an issue for everything we've been talking about. If we go down the CBDC route, are we fundamentally going to change the way in which money is created in our society? I'll talk through a little bit about what happens now. At the moment, the money that people use every day to buy their shopping, to buy coffees, is created by private banks. It's created by private banks when they lend. So when you take out a loan or a mortgage, the bank puts new money into your checking accounts. Terminology, what we know as a demand deposit account. And you can then spend that money. So in looking at CBDCs, my first question would be, how does a CBDC work in relation to that money creation dynamic? How do we get to a point where, how do we marry up the concept of private banks creating money through bank accounts, which you then spend through a transaction system, which under CBDC might be organized around CBDCs and wallets and things? How does that work? And I don't think that saying, well, everybody can have accounts at the central bank entirely answers that question. I think we need to look at how banks work and in a way what their role is going forward. Are we going creating money when they lend? Or if we're not, then how are we going to make sure that the money that banks create gets fed into people's accounts at the central bank? At the moment, that happens through the payment system when the loan is drawn. because banks involved exchange reserves. Are we going to disintermediate that completely? And if so, who's going to handle lending and how are they going to do it? I think that needs to be thought through in terms of how CBDC is very much organized around debt, household debt and corporate debt. This has been touched on a little bit by some of the earlier speakers in relation to monetary policy, because historically monetary policy has always been about affecting the price that banks pay for the reserves they need to settle payments. Since the era of QE, that has changed somewhat to being affecting the price that banks receive when they make deposits at the central bank, because they've got more reserves than they know what to do with. But it amounts to the same thing. So somebody said, is the central bank going to pay interest on CBDC accounts? And this is a question that needs to be thought through. But we also need to think about how lending will work in a world. Are we going to move towards where banks can only lend out money they've already got? What effect would that have on the economy, given that historically, banks have simply lent and then found the money to settle the payment later? This needs to be thought through, and otherwise we end up in a discussion purely about the bank digital currencies, whether account-based or tokens, it doesn't matter, being used to make transactions, but nobody's discussing where the money comes from. Money. How is it going to be created? How is it going to get, who's going to put it there? We've had a discussion around universal basic income, which I actually support, by the way. I would quite like there to be a CBDC, which provided a universal basic income for people as a monetary, but the implications of that need to be thought through. I mean, there is an inflationary consequences and so forth. We need that, but at the moment we seem to be talking about the mechanism without considering the mission of the money. How does it get created? Whose assets are they? Are they backed by lots and lots of sovereign debt and no private assets? I mean, how's this going to work? So all of those things, I think, need to be brought into discussion. I think the CBDC, and one of the reasons why banks are being quite cautious about this is because of the implications for the structure of the financial system. And there are many people who think that banking might not be a bad idea. And that certainly is how the cryptocurrency mostly is on full reserve. So you have your money and you lend it. You don't create money when you lend, although there are moves. But at the moment, I would like more discussion of the interaction between the CBDC and a payment system organized around CBDCs and lending, whether it's by traditional banks or by other providers, and how that will work in future. That was sort of the first part of my my thinking on this, really, was about the and my second part is to do, I guess, the interaction between central banks and a different private monies, of whom we have rather a lot, have a shakeout in that area. So if a CBDC comes to what is quite a big market now, which is the cryptocurrency market, is that fundamentally going to change the way it operates? Are cryptocurrency providers going to stop hanging themselves on Tether and hang them on a CBDC themselves on a CBDC instead? Now, a lot of people think that might be quite a good thing, because Tether has all sorts of risks around it, but it does kind of fairly fundamental. And that's quite a small market. When we come to talk about, we're talking about something much, much bigger. And I think this is where the whole question of wholesale CBDCs really needs to be thought through. The way in which central banks work with financial markets is that they work with reserves, go to banks, and they are involved in the intermediation of government debt through broker-dealers. Right, they don't provide liquidity to the whole market, and there's been quite a lot of debate around that. Actually, this was a year ago in the repo flare-up, where the Fed appeared to be providing suddenly to provide liquidity to the whole market because the broker-dealers weren't distributing liquidity properly. Are we going to see broker-dealers disintermediated? Are we going to see banks disintermediated? Are we going to see central bank distributing liquidity directly to all market players to act as market makers and liquidity providers in the markets? And that's quite a fundamental shift. And I think the implications of it need to be thought through. The implications particularly rates, bearing in mind what I said already about the conduct policy being historically about influencing the price that banks pay or receive for reserves. It may be that we need some other kind of way of influencing markets. So my two sort of areas that I think, you know, in thinking about CBDCs, that we need to think of. But I think it's an immensely promising development. And, you know, if a CBDC can improve financial inclusion, can make it possible to get money to people we've just had, can give people a universal basic income and bring it on. But I do think we have to think about the implications for the structure of the financial system.
Thank you, Francis. And
I'm happy to answer lots of questions about this.
Yeah, and that's awesome because, you know, you as a writer and you always ask great questions and which inspire a lot of further thinking. And as, you know, complex as CBDC, and there will be so many more questions. You know, as of now, many central banks are just looking at the question as the benefit, risk, whether you know, they should or should not. But you know, when you really are design it or implement a project, then there will be the legacy system, then there will be, you know, different competing agenda, then there will be the end user experience, then, you know, so many questions which are necessary or important need to be asked and answered. And I really appreciate your input. Yeah. And now let's move to Dan, and who can just share with us your thoughts on CBDC. Do we have a slide?
No slides today, and hopefully everyone went wired. So analog still best. Thanks, Francis. Of course, going after Francis is because she opened up the simple depth of what I wanted to talk about, which was the kind of direct tech and how these things would actually work in a computer system to the much broader economy. Maturity transformation of commercial banks in a two-tier system. And these things they're massive. So I'm going to narrow it down and kind of go back to basics. What is three key elements that make up a central bank digital currency? And I apologize if I throw acronyms out willy-nilly, but it's a liability of the central bank. So it's a claim on the central bank. We have wholesale CBDCs that have existed for years. What we're really talking about today, I think what the majority of the panelists have been talking about, retail-based CBDC, or broadly distributed, generally available central bank digital currency. But don't forget that the wholesale payments, only, you know, paying for your cup of coffee or cup of dollarized $5 to $6 trillion per day money flows around that rely on the wholesale economy, and the wholesale digital currencies would support that. Now, a central bank digital currency or wholesale interbank settlement with the retail level, and that's something just as an aside with the Swiss National potentially creating a central bank currency to support the Swiss digital exchange, or excuse me, to settle their digital assets in central bank currency. Effectively, for, at the moment, one exchange operator. Swiss National Bank has not decided, they've not announced major shift. If they create a central bank, be used on the retail level. Digital currency in the name, it's in digital form. But what is that digital form? And very different, different formats. You could run this on token-based systems, can run in various, that kind of is a broad topic. Fiat currency. Going back to the concept that money is a social good, that fiat currency is a social good, should be available to all citizens, all participants. Not about a certain type of technology, whether blockchain-based, other distributed ledger-based, or frame. You know, the 30-year-old mainframes are the basis of the banking system still in the United States today. The concept that this is something that should support in the country and not have a political or economic agenda. And importantly, because stability from a central bank, these are generally rather conservative, stability is key. And you can't go and switch out the basis of your central bank digital currency year by year because the technology shifts. These are things that you need to think about in design for 30, 40, 50-year design lives, as opposed to what in kind of Silicon Valley, 3 to 6 month design lives. So going back to Sonja's point on design is critical. Do we really need a central bank digital currency? There are a lot of real-time gross settlement systems running around the world, RTGS. Eventually, in the United States, we'll have one, hopefully. That other than the private backed, but one that's run by the Federal Reserve, run by our central bank. So why would we need a central bank digital currency versus a retail gross settlement system? And I'll just bring it back to 2 points. It's all about bankruptcy. And where's the money when a bank inevitably goes bust, or payment service provider more broadly? And as Francis pointed out before, where the deposit sits. Is the deposit in the balance sheet that can then use it to create new money, that out so people can finance companies, buy houses, etc. The concept of the bank, where you can go and put your physical cash and jewelry and important paperwork, but it's not actually on the balance sheet of the bank. And that is really, really important. A completely different flavor depending on how you look at it. I wanted to bring back, I posted the quarterly report, single paper from the Bank for International Settlements. I posted it to attendees, hopefully. It's really what the idea is, because there are various different ways that OMFIF that's been on, Bank of Canada, also central bank digital currency. Going back to physical architecture, the architecture of the central bank digital currency should be the basis, should be based on what you're trying to do. Form should follow function. You should not go out and build a central bank digital currency just because you want to use the latest and greatest technology. Technology changes rapidly, as we see. But there are various different types of central bank digitals. There could be a direct account or token actually sitting at the central bank, where individual citizens could have a claim to the central bank, and the central bank is running that system and the accounts and managing the tokens. Something that central banks don't really have a customer service. They are public facing to the broad public, but not to individuals. But there, the claim is literally on the central bank. I could walk into the Denver branch of the Kansas City Federal Reserve and say, I'd like access to my money. And in that case, I would be able to get it. Talking about for the retail level, indirect accounts, bank, where the central bank is going to issue or mint the currency to banks, commercial banks, payment service providers to manage the processing of the payments flows day in and day out. So every time I want to be, it is the commercial bank or payment service provider that's going to manage that payment. The central bank isn't going to have to touch every single $1, €1, £1 payment, because that's really useful for the economy. But still, the claim is on the central bank. The claim in the case of a bankruptcy of that bank or to work out that bank, I will get, because the nation guarantees it. The central bank will pay that claim, not the bank or payment service provider that is actually processing the flow, and that's really important. Within that, and I'd like to kind of highlight BIS's papers on this, the one that I posted, as well as some other things that there can be different ways that the commercial bank interacts with the central bank. And this is in an account-based system, this is where I focus. And BIS calls it the hybrid or the intermediated models. The banks manage the payment and retail holder, so they tell what individual balance is. They tell that to the central bank on a periodic basis, kind of every day update and say Dan has $100 in his CBDC wallet. The claim is still on the central bank. It's an indirect mechanism. If the bank is insolvent, I don't worry about it, because the important part is the central bank knows what my holdings are. It knows what my balance is. So if tomorrow the bank bankrupt, the central bank can just move my funds over to a different commercial bank and say, Dan, you're no longer under Bank of A. You're now being serviced. And so the central bank in that case sees the payment flows. They know what the change is to my individual bank balance. Intermediated is similar. Important difference is the balance that the bank holds in central bank digital currency. So all of its customers that hold central bank digital currency, that is reported to the accounts of individual participants, is not a central bank. So it's more private. It's fuller on a day-to-day basis. But in the event of having to work out a bankruptcy of a commercial bank, it's a little bit more challenging because the central bank doesn't have the knowledge of every citizen's account balance. So they can't easily transfer that over to a new commercial bank. So the idea is the sub-accounts are not to the central bank, just the bank's balance, the commercial is still on the central bank. Whether the system is account-based or token before, really an account-based of the participant to validate holder has to provide a mechanism, whether that two-factor authentication, password, biometrics, etc., to prove that they are the rightful owner of the account, and then can use that account to transact. As opposed to a token-based system where just the knowledge of a private is enough to prove that you own that asset. So it's really important and kind of a really important challenge for the technology, but also token-based systems are far more complex. Technology and the value of that payment together, you know, a Bitcoin payment, a Bitcoin cannot be operated on the Ethereum network. They just are two disparate systems. You'll never be able to operate them together. You can transfer a bit to, say, a fiat currency or to Tether or some other stable coin, so-called stable coin, and then transfer that to another system, but you can't directly interoperate. But tokens are closest to cash in terms of anonymity or potentially pseudonymity, and the potential to potentially use them disconnected from a network. Where you might be able to do a transfer of token directly from one disconnected system to another disconnected system, and then later reconnect back to the network and update the network overall. But as people in the cryptocurrency world know, tokens are difficult to deal with. They are not user-friendly. They're not, and even people in the cryptocurrency world who are very technology forward and early adopters of technology, the vast majority of them still hold accounts with the exchange. And the centralized exchange transfers tokens on their behalf. So even people who claim that they are token holders generally aren't. They're generally account then transfers tokens on their behalf. The common phrase is not your keys, not your coins. And so this kind of is already proving the point that maybe it should not be the basis for the broad use of broad system. They certainly can, where needed, in niche segments to support people who are truly connected from the financial system. And that's an important use case that needs to be supported. So the balance of account-based systems and token-based systems, I don't believe there will be a pure CBDC that only uses account-based or only uses token-based. I am not a maximalist on supports account-based systems, but I believe there's in the unbanked and certain segments of the populace to need a token or other form of currency, digital format to support those use cases. So here in the States, we have like a 7% unbanked rate. In emerging markets, that number could be greater than 60%. And obviously, both the currently banked and unbanked people need to be supported. The goal of most financial banked into the formal economy to give them bank accounts or accounts with other financial institutions where they create credit profiles and get access to other financial instruments that they might need in the so the goal is to move people from the unbanked to the banked. And so you really need to have that account-based system to support interbank payments and accounts between payment service providers in the denomination of currency. And that's really the kind of the key. Tokens will be used, stored value that are tap to pay, I think will be something that where you have a credit card, but it has a chip inside that if I decide I need to send $10 to someone and I physical item, I can tap my card against theirs and transfer the value into the fore. I really am interested in seeing what PBOC is, People's Bank of China, excuse me, with DCEP and how they're going to handle the offline payments that they are using in their proof of concept that's out there right now. I really like to see the bits and bytes of how that works from the technology aspect. But that's those kinds of systems where there will be a hybrid of based CBDCs and token-based or other form of CBDCs in stored value cards be prevalent in the future. With that, I'll turn it back over and hope for some great questions later on.
Thank you, Dan, and I hope that everyone learn more about this the technical side and also account based, and I also like you link that back to Francis questions and many. I hope that you have provide some clarity to everyone. And now let's move to Joe. And last but not least, because this is on purpose that after all the conversation happened, and I want to Joe to share on specific projects and how did it work, how it is working, and how it's transforming people's life. And Joe, the floor is yours.
Thank you very much. So we're already pushing the envelope when we talk about central bank digital currencies, because this is cutting edge technology and is about as cutting edge as we can get. So let's not stop here. Let's keep going, and let's talk about a scenario that involves, because that in effect is what the Marshall Islands is trying. Of a country in the middle of the Pacific, which you talked about, the Bahamas project. It's a small population of different islands, and a lot of people on islands literally have no access to a bank. The only way the bag of currency on a boat and moves it from one island to another, and that is a pretty inefficient system. But on top of that, the history of the Marshall Islands is that for many years it was, after World War II, a territory of the United States, and it had a country, but because of its legacy, its legal tender. And so the Marshall Islands is looking at, for the first time, creating its own legal tender. And one of the most is that as they look at creating their legal tender, and they're going to bypass paper and coinage altogether. So once they launch their tender, it will only exist in digital form, and there is no other country in the world that will have a legal tender that meets the definition of legal tender, but only exists in a digital format. And that is pretty, amazing, the way that they're going about doing this. Now, we won't have a central bank, and that is going to be a highly regulated currency. It will be. There will be various regulatory bodies. Currency. It will be regulated the way legal tender. It will be subject to the same type of rules and regulations, for example, with respect to things like KYC and know your customer requirements that legal tenders are subject to. But the one big difference is that one of the functions performed by a central bank is a monetary policy. When we look at central banks, we know that central banks play regulatory roles, but one of the things we think about is and how they maintain the value of their currency. And so one of the things the Marshall Islands said was, well, digital world we have, once we combine the concept of digital currency and blockchain technology and smart contracts, we can actually create a monetary system that's embedded into the technology itself. So among other things, of the new currency they're calling SOV is going to be managed through the smart contracts that underlie the digital currency. And so SOV will increase at a predetermined annual rate that automatically occurs based upon these that hold SOV at the time, receive additional SOV based upon the increase in supply that will occur annually. Other things that the Marshall Islands is going to do is build into the SOV, their digital currency, the ability to track identity, to be able to create a system that allows onboard people and access to the digital currency in a way that again addresses KYC and AML requirements system at the retail level, so we don't have to worry about people losing their currency. Because as some of the other speakers have talked about currency, you have to figure out a way to get the hands of individual citizens. You have to be able to come up where they can use smart cards or smartphones to access their currency without having to be experts in blockchain or digital wallets or cryptology. And it has to be as easy as pulling out bills out of your pocket today. And so part of what the Marshall Islands is doing in creating their digital currency is creating an integration system so they can be used by citizens both within and outside of the Marshall Islands in an easy, seamless way. Their smartphones or smart cards will be able to access their currency, lose their card or their phone, won't lose the underlying currency, going to be part of the infrastructure. And one of the most interesting things that the Marshall Islands is doing is because, again, this is also new. When we talk about a country that's issuing and creating a legal tender for the first time, but immediately going to the digital world, it is radically different than anything we've. And so the Marshall Islands said that we can't simply dump this or introduce this new digital currency onto the world all at once. We need to figure out a logical and rational way to the citizens of the Marshall Islands, but to the world. And so they decided that they're going to create a transition period. And the transition period is going to be 18 months. And during that 18-month period, they're going to or make the SOV available on a subscription basis. In other words, they're going to allow the market to begin to subscribe to the rights to receive SOV during an 18-month transition period. And then at the end of that 18 months, anybody that's subscribed will receive the corresponding number of SOV. During that 18-month period, and this is one of the things that I think is really cool, is use that time to put in place everything, the entire infrastructure, and test it and test it to make sure it works. Policies and procedures that are needed to oversee legal tender is up and running, is robust, and is functioning. They're going to make sure that it's a quasi-private public blockchain, but they're going to make sure that the blockchain for SOV is functioning properly. They're going to make sure that all of the government regulatory bodies that are going to be overseeing SOV on an ongoing basis are up and running and their appropriate policies and procedures in place. And so they're going to take this, they're going to test the technology. They're going to test the regulation. They're going to test the system to make sure that SOV can integrate into commercial banks, both within and outside of the country. So all of these things that we take for granted with respect to legal tender that's already existed is something that they're putting in place. And so this 18-month period will be the period of time that they test all of these systems. And then when they get to the end of the 18-month period, what's going to happen? Either the government will determine all of this has worked as they intend and have expected, to the right to receive SOV will actually receive their SOV. What? We spent 18 months working on putting in place this. We don't think it's going to work. We don't think it makes sense. We don't think it's right. people that subscribed get their money back, less certain fees that are spent during this 18-month period. And so it's a great experiment as far as how do we introduce a legal tender that doesn't, how do we do it without a traditional robust central bank structure? How do we make all this work in a rational and thoughtful way? And if this out over the next 18 months, we will see for the first time a brand new legal tender in digital format with that coin that exists. It's a very interesting, very unique project. The government itself is going to take a portion of SOM that's minted, and that it will be allocated to various trusts that are going to serve specific functions within the country. Marshall Islands is a small island nation, is among other things facing huge crisis with respect to climate change. If we don't take action, it's very possible that in the next 50 years, the Marshall Islands will cease to exist because they'll be underwater. The SOB that's going to be minted will be used by go into various funds to help preserve Marshall Islands, to address climate change, and to make sure there's a robust future for the country. The other thing that the Marshall Islands government is doing with the portion of the SOB is creating is that anybody that knows the history of Marshall Islands probably knows that after World War II, once it was U.S. territory, the United States for nuclear weapons. You can imagine a lot of environmental issues with respect to some of the health issues that still linger with respect to citizens. A portion of the proceeds used to address those issues. And then finally, as I mentioned, the Marshall Islands is utilizing the SOB as a means to create financial inclusion for their citizens that don't currently have easy access to banking and financial services. And so they are going to empower their citizens by using a digital to bring in effect the world of banking and finance to those people that don't currently have it. So that, in a nutshell, is what this project's all about. What we're doing doesn't have a lot of precedent, but it's exciting, and hopefully it's going to really revolutionize all piece of the world.
Yes, thank you, Joe. And I think, again, that this is a very interesting project, and where that's you have a nation and which doesn't have the central bank structure, but issue one of the first digital currency, which will just impact really how the economy is going to operate. And as a pilot, as an experiment, and I think it's definitely worth a lot of attention. And yeah, thank you for sharing all this. And now let's just go to the question side. And the first question, thinks this is the last panel of today. And my first question is just responding to all the presentations, discussion we had earlier. And as of now, that's for you, what is one of the key trend within the CBDC that you are going to just focus in the next few months, and no matter in terms of learning, in terms of research, in terms of criticizing, or in terms of building, and what will be your CBDC related activity in the next few months? And from Francis?
Questions, and those questions are for, so I shall be looking at which CBDCs potentially affect how banks work, what banks will look like, what lending will look like, and trying to understand that interaction more, and the whole way in which money is created in our economy, and also the interaction between central banks with CBDCs and financial markets and private monies. That's a topic.
Yep, and so I'm looking forward to reading your articles and and continue this conversation, and hopefully that we can also bring some of the experts in the space to contribute to your thinking and yeah.
Sure.
Yeah, awesome. And then, so, what will be your focus?
I'd say two focus areas. One that I mentioned, the integration of account and token or card-based, how to best create an offer. The majority of payments transactions via account-based systems, while still other segment of the market is not banked properly with access either token or stored value cards. That is kind of a tough challenge to make the two. And then the completely different area would be cross-border transactions. How to get transactions across borders between two sovereign nations that may or may not be friendly, but to get them to interoperate, how to bring the technology down to the later so that that central banks from regions can interoperate on their timeline. And those are some of the early adopters, but there are plenty of nations that are going to take a jab at my own country here. The Federal Reserve is not going to be issuing a central bank digital currency in the 2020s. They just take so long to do analysis and study, and rightly or wrongly, it's being thoughtful and doing your research is a good thing. But we won't be issuing a CBDC in the 2020s. So we'll have a decade of interoperability issues where some with CBDCs and some without, and so that is a.
Thank you, Dan. And Joe, and so I think that for the Marshall Island project already, a lot. Probably the question to you is that what do you hope to happen in the market in this year or next, in addition to the project you're working on? Yeah.
So two things. One, I think that one of the most important, hopefully, with the Marshall Islands project is that we're not talking about large countries like the United States or the EU. We're talking about a very, very small country, but is the way for smaller emerging and developing market countries to increase the wealth of their country by expanding of their citizens to global financial services. And so one of the interesting things from the Marshall Islands is this is something that can be replicated in other similar smaller emerging market countries, and can we increase participation of people around the world that have been marginalized and sidelined access to global wealth and commerce and just participation in everyday financial activities. Though aspect that I want to just briefly mention, because I said that part of what we're doing is building into the currency methodology to deal with things like money laundering and identity. And so there's a huge policy issue that we've talked about, but is going to become an increased. Money is dumb. Existing paper money is really stupid. It's very easy to just take a suitcase full of money and go somewhere and do all kinds of illegal transactions that nobody really can monitor. And so when we start to talk about digital currencies, we're going from dumb money to smart money. And that means that over time, we perhaps have a better methodology to be able to track and prevent illegal activities with respect to money. So addressing money laundering and other criminal acts combined with technology. At the same time, a government that is creating a central bank digital currency increasing the ability of that country to track how it's who they're giving their money to, what they're buying, what type of transactions they're doing, is a scary and dark element to it, because you can track how your citizens are using their money every day. That will tell you probably more about anything else the government can do. And so while this has left the station, we're moving down the road of central bank digital currencies, I think the debate has really not yet begun as to how we as a society globally are going to balance the desires of governments, the temptation to abuse their power by side the private and personal activities of their citizens. And there's a scary side to that. And I think we all of us need to be talking about those issues now, because otherwise the technology is going to get out of these philosophical and sociological questions that need to be dealt with.
Thank you, Joe. And yeah, I think this is a great, ending from the question side, because when you just talk about the potential future, and for some that might look really exciting, for some it looks really scary. And from the question that Francis asked, and there will be another set of questions in addition to the operational side, the impact to the liberty and freedom and all those kind of key fundamental rights each individual have, and how the government, how the society is going to be operated. And when we just talk about the concept of privacy, if how you spend money is not a privacy anymore, and do we still have privacy or not? And then the law to protect privacy, how does it even work? And so I think there will be a lot of questions need to be addressed at this stage. So that's why, as an emerging topic, it really impacts so many aspects of our life. And that's also the reason why we want to launch this CBDC committee. And when we just started from the CBDC working group, we mostly engage with the central banks and also the technology experts. But I think at this stage, and the conversation has to go much more broader, and the governance issue, the privacy issue, and also the inclusive finance related issue, how that can just channel or impact the legacy system issue. All of those issues are beyond the benefit and the risk framework for CBDC. Is beyond the implementing principles, design principles. So I think that's why we expand the working group now to the committee, and this is an open invitation to many of the experts in our network, that we want to just start building several different track. And one is around the governance related track, and the other is around technical track. The third is around the country experience track, so that we can have a different conversation to just really inform the community, inform the community, inform the stakeholders, and make sure that we have exciting innovation, but in addition to all the benefits we may receive, but we also can just control the risk and make the society really better, a better place for everyone. And so this concludes our CBDC forum. And although Fintech4Good has been organizing many events in the past, but this is the first CBDC forum that we organize, and we really appreciate all the contribution from our great speakers, and other speakers already left, and so you three will just get all the applause from me. Thank you very much. And so you really
Thank you, Xiaochen.
yeah, we are looking forward to continue this conversation in different formats. There will be publications. There will be one-on-one interviews. There will also be more larger events, and hopefully that the CBDC community will becoming a platform where we can host this open dialogue and then sharing knowledge. Again, thank you everyone who stay with us from 9:30 till now, and it's more than 3 hours, and really appreciate that. And we look forward to continue the conversation. Thank you, everyone. You have a wonderful day.
Thanks.
Thank you.